As I've said on previous occasions, the board will not increase the cash rate until inflation is sustainably in the 2 to 3% range. Given the recent inflation data and the forecast that I talked about before, I'd like to provide some additional detail in our thinking here for you. We do not have a specific definition of what constitutes sustainably in the target range. The actual rate of inflation is relevant, as are the trajectories for inflation and the outlook. So too is the breadth of price pressures in the economy and the factors driving them. Based on the evidence we have so far, it's too early to conclude that inflation is sustainably in the target range. In terms of underlying inflation, we have just reached the midpoint of the target range for the first time in over 7 years. We've reached the midpoint for the first time in 7 years. And doing this comes on the back of very significant disruptions in supply chains and distribution networks, which we expect to be resolved over time. It also comes at a time when aggregate wage growth in Australia remains low, and its rate that's unlikely to be consistent with the inflation target being sustained around the midpoint of the target range unless productivity growth in Australia turns out to be very weak. And as I discussed earlier, there are a range of significant uncertainties, both about the persistence of the price pressures and developments in the labour market. And these uncertainties are going to take time to be resolved. We are in the position where we can take some time to obtain greater clarity on these issues. In countries with higher rates of inflation have less scope here. The Board of the Reserve Bank is prepared to be patient as it monitors the evolution of these various factors that are affecting inflation in Australia. It's also relevant that Australia is within sight of a historic milestone. That's having the national unemployment rate below 4%. This is important because low unemployment brings with it very real economic and social benefits for many Australians and for the communities in which we all live. These benefits shouldn't be underestimated. Full employment is one of the RBA's legislated objectives, and the Board is committed to playing its role in achieving that objective, consistent with also achieving the inflation target. As we navigate towards full employment, we do have scope to take the time to distill the balance between supply and demand in the economy. Over the course of this year, we'll be watching how the various supply-side problems resolve and the effect of this on prices. We'll be watching consumption patterns and whether they normalise and at what speed they normalise. We will also be looking for further evidence that labour costs are growing at a rate consistent with inflation being sustained within the target range. I expect this evidence will emerge over time, but it's unlikely to do so quickly. Finally, I would like to make it clear that the RBA is committed to achieving the inflation target. The inflation target remains at the centre of our monetary policy framework. We don't want to see inflation too low, and we don't want to see inflation too high. We will do what is necessary to maintain low and stable inflation in Australia, which is important not just in its own right, but it's also a precondition for a sustained period of full employment, which we all hope we can achieve.